What's up guys, welcome back, it's Kongboy. And in this video I'll be doing an analysis on the crypto and NFT markets. I'll be talking about what's happened over the last year, what's going on right now, and what to look forward to in the near future. NFTs started gaining popularity in early 2021 and then absolutely exploded in the second half of the year, with some selling for millions of dollars, celebrities and influencers buying NFTs, and a lot of serious hype for the metaverse. As we can see from this Google Trends graph, search volume for the term NFT spiked near the end of last year, and then interest quickly dropped off at the beginning of this year. I think the drop in prices for a lot of these NFTs was inevitable since so many of them were overvalued and it really didn't make sense to have such insane evaluations. But there's also a bunch of other factors that led to the drop in interest, and I think a major one was the tensions and war between Ukraine and Russia. A lot of people thought this was the start of World War III, and it really is a terrible situation, but fortunately it hasn't gotten too crazy like we thought it could. Another is that it was simply just an oversaturated market. There were so many NFTs that just didn't do much at all, and it was a little too easy to release a collection and sell out. As well as it pretty much just being a pre-metaverse wave, where it was kind of just like characters and avatars for the metaverse, but without much to do with them and really anything to play in them. Even NFTs that are considered blue chip are down 70 to 80% in terms of ETH, while ETH is down significantly, meaning that these NFTs are down even 80, 90 to 95% in USD value. I think it'll be a bit of time, maybe a year or two, before NFTs really gain popularity again. And in the meantime, they'll continue to evolve and new things will come out that will attract the average person that maybe had no reason to invest in the first place or use the technology. Or maybe at some point people will be using this technology without even realizing. There's no surprise that with such saturation in the market, 99% of these thousands of collections have become valueless. Now this definitely means we're in a bear market, but now the question is, when did it start? How far through it are we? And when might it end? So based on the Google Trends chart, it looks like this bear market started at the beginning of the year. But if you take a look at this next graph, using Dune Analytics, which is a great dashboard to visualize some data that's either on-chain or just anything. If you look at this chart, you'll see that starting in May through June was a steep decline in monthly volume on OpenSea. Also, the average NFT sale price in January of this year was around $511. And then in July, that dropped all the way down to $115. At a glance from the outside, it may seem like the NFT market is dead, but that is not the case, and I believe it never will be. But there still have been a lot of people that have left the space, good and bad. So with not as much volume happening in the NFT space, of course, there's gonna be scammers that won't be interested and will look for other opportunities. But in my opinion, and somewhat objectively, it is the freest market in the world. So there's no surprise that there still are opportunities for scammers to steal people's assets without really any recourse for these people that are victims. Over the last year, there's been $100 million in value stolen in NFTs. And this is both surprising and not to me at the same time. And the reason for this is because you'd think that as people have left, those who have stayed in the space tend to be more experienced, know what they're doing, and have taken the safety precautions. But on the other hand, people might just be more desperate to take some opportunities that have more risks or could potentially be malicious scams. During last week's meeting, Federal Reserve Chairman Jerome Powell stated they will not be pivoting their monetary policy and they will continue to raise interest rates for the foreseeable future in order to combat the highest inflation seen in decades. The Fed being set on further tightening the economy using monetary policies like hiking interest rates means that there certainly is more pain that's going to be felt by markets, and unfortunately, especially crypto. With that being said, I'm going to discuss some cryptocurrency prices and an outlook for the future mid to long term. Before I do that, I'd like to give a big shout out to Benjamin Cohen, who's a nuclear scientist turned crypto analyst YouTuber. He's taught me and a lot of people about crypto market trends, bull markets and bear markets, and a bunch of other things. He strongly emphasizes the concept of lengthening cycles and diminishing returns, which, if you take a look at graphs, has pretty much held up as true. Now, taking a look at this Bitcoin price chart, you'll see it's not your typical graph in that it's on a logarithmic scale, which makes it easier to see the ups and downs. And the solid red line is the 20-week moving average. This serves as a support line during a bull market, and you'll see between 2014 and 2016, it does not cross this line and does not go below it. But it does test this line and then continues upward. But in a bear market, it acts as a point of resistance, and usually a bear market ends when the price holds above this line. Zooming in on where we are now, you'll see that a few months ago, we got rejected by the 20-week moving average, and it was followed by a significant dip. So this really is just an example of why the 20-week moving average is such a critical point, in that if we can hold above it, test it, and then move upward, that's a very strong signal. But if we reach it and then go down, it's a very weak signal. So you'll also notice that Benjamin Cohen, what he preaches, the lengthening cycles and diminishing returns, is pretty clearly evident on this logarithmic graph. I also have 4 guesses here, 4 educated guesses based on just what I've watched from him and some of the research that I've done. But basically, it wouldn't be too crazy to see the bear market bottom to be in 600 days after the market top. We're currently around 280 days from the market top, and the bottom could easily be $13,000 or something less. But based on previous lengthening cycles, it would also not be too crazy to guess that the next market top would be in 1,400 days from now, which would put it at 2027 or 28. And $150,000 doesn't seem like too crazy of a price for Bitcoin in 5 to 6 years from now. Now, when it comes to Ethereum, it definitely tends to be more volatile than Bitcoin, as well as the altcoins, many of which are on the Ethereum network. Now, it experiences much more downside in a bear market, but has a lot more upside in a bull market. So this is basically that it's more volatile. At the time of making this video, Ethereum is trading at $1,500, and it bounced all the way from its recent low of $900 all the way up to $2,000. So more than 100% increase in a very short amount of time. But especially with the Ethereum merge coming up, people are probably going to look to buy the rumor and sell the news. So I would not be surprised if we see ETH go down in price, especially after the merge occurs. Absolutely no one, not even people who call themselves experts, can accurately and consistently predict the price of Ethereum in the short to medium term. But if I had to make an educated guess based on historical market cycles and price data, I would say that over 6 months to a year from now would present some good opportunities to buy Ethereum if you're looking to do so. Moving on to some recent and near future crypto current events and updates, the Sandbox game, which is one of the largest metaverses, released their alpha season 3, which is free to play by anyone, and they have rewards for people at the end of the 70-day season. Also, Binance, the world's largest cryptocurrency exchange, recently partnered with Mastercard to create a better crypto payment solution. And it uses crypto cards that are tied to a user's Binance account, and it'll be supported at over 90 million locations, digital and physical. After this happened, Vitalik even made a tweet saying that crypto payment methods are underrated because not only are they censorship resistant, but they're much more convenient. And right now, the 2 largest blockchains, Bitcoin and Ethereum, offer transfer fees ranging from 80 cents to $2, while Visa charges a flat rate of up to 2.5% the value of a transaction. The Ethereum merge, the first step in Ethereum 2.0, is scheduled to happen on September 19th. For those of you who have stayed till the end of this video, and I'm assuming you have if you're watching this, then I'll give you guys a piece of not financial advice, but financial strategy. It's called dollar cost averaging, and maybe you've heard of it. But it's something that I've learned over the years, and it basically works by, rather than trying to time the exact bottom of the bear market, if you have, let's say, $1,000 that you plan on investing into Bitcoin or Ethereum, for example, then once you feel like we're getting towards the bottom of the market, but no point in trying to guess. Just start buying. Not all at once, but a bit by bit. Thank you guys for tuning in. I hope you guys enjoyed and learned something from this video. If you have any questions, leave them in the comments. Catch you later.